Hi, everyone. Welcome back to EdgeBytes, where we try to bring you signal over noise from the enterprise edge in the enterprise AI era. Let's see. We are going to talk about three, I would say, seemingly straightforward announcements that's come forward recently. One from OpenAI, one from Atlassian, and one from MongoDB. Quietly drawing a sort of much sharper outline of where enterprise AI is headed, probably more so than product launches or conference keynotes that we've seen lately. Because when companies adjust leadership and org models at the points where revenue is created, where cost is structured, and where growth is captured, they're not experimenting, they are repositioning for where value will concentrate next. I'm Mark Vigoroso, founder and CEO of the Enterprise Edge, and today we'll quickly break down the significance of these events, these announcements, and what customers, partners, and competitors should take away. So let's start with OpenAI. They appointed Denise Dresser as Chief Revenue Officer, and the language in the announcement is pretty precise. You know, Denise's experience building and scaling global sales organizations will be instrumental as we bring our technology to more customers. That line matters because it reflects a shift in the center of gravity. The bottleneck is no longer whether the models work. The bottleneck is whether enterprises can operationalize them in a way that is governed, repeatable, and economically defensible. OpenAI is transitioning from a phase where demand was pulled by curiosity and capability into a phase where revenue must be engineered. That means sales discipline, segmentation, pricing architecture, and potentially most importantly, proof that AI can compress time to value inside real workflows. The competitive backdrop makes this even more urgent. Microsoft is embedding AI into existing enterprise agreements, effectively turning adoption into an extension of contracts that are already in place. Google is doing the same across Workspace and its broader ecosystem. At the same time, open weight models are lowering the barriers for enterprises that want more control. So OpenAI's path is narrowing in a productive way. It has to win not just on intelligence, but on reliability, governance, and the ability to tie usage directly to measurable outcomes. If it does that, it becomes the execution layer inside the enterprise. If it does not, it risks being abstracted behind platforms that bundle AI into something broader. Now, contrast that with Atlassian. Atlassian's decision to cut 10% of its workforce to self-fund AI investment is one of the clearest capital allocation signals we've seen in this cycle. The framing is explicit. This is about slashing 100% of its workforce, 10% of its workforce to self-fund investments in AI. That is not incremental optimization. That is a reconfiguration of the operating model to prioritize future value creation over current structure. What Atlassian is really doing is removing organizational mass to increase velocity. It is acknowledging that AI is not a feature layer that can be added on top of Jira or Confluence. It has to be embedded into how work itself is created, tracked, and executed. The company already sits at a powerful intersection: developer workflows, project management, and what you call knowledge collaboration. If AI can reduce friction across those surfaces, automating triage, accelerating engineering cycles, synthesizing cross-team knowledge, Atlassian moves from documenting work to actively shaping it. But there is a narrowing window. Microsoft is collapsing layers across GitHub, Teams, and its broader productivity stack. ServiceNow is pushing aggressively into workflow automation with AI embedded at the process level. And a new class of AI native tools is being built without legacy constraints. Atlassian's success depends on whether it can reduce friction inside existing workflows faster than competitors can redefine those workflows entirely. Then we look at MongoDB. MongoDB has appointed Ryan McBann as Chief Revenue Officer. And again, the language is revealing. Ryan's deep experience scaling global sales organizations will help MongoDB capture the next phase of growth. That phrase, capture the next phase, signals that the company has already achieved product market fit at the developer level. The question now is how effectively it can convert that into enterprise scale revenue. In an AI-driven environment, the data layer becomes the foundation for everything, but not all data platforms are positioned equally. MongoDB's strength has always been flexibility, its ability to handle unstructured and rapidly evolving data models that mirror how modern applications are actually built. As AI applications proliferate, that flexibility becomes more valuable, not less. Real-time applications, dynamic schemas, and distributed architectures all favor platforms that can adapt without heavy restructuring. But the competitive field is tightening. Amazon Web Services continues to benefit from deep infrastructure embedding. Snowflake is moving closer to the application layer, while Databricks is converging data engineering, analytics, and AI into a unified environment. MongoDB's opportunity is to move up the stack, to become not just where data lives, but where AI-powered applications are built and executed. When you step back, these three moves, OpenAI strengthening revenue leadership, Atlassian reallocating cost structure, and MongoDB reinforcing monetization, are all responses to the same underlying shift. Enterprise AI is moving from experimentation to economic accountability. The data already supports this. We've talked about it on previous episodes. McKinsey has reported that only a minority of AI pilots successfully scale into production environments. Gartner projects that while the vast majority of enterprises will experiment with generative AI, far fewer will achieve sustained returns. And IDC continues to forecast massive growth in AI spending, with global investment expected to surpass $500 billion within the next few years. The gap between spend and realized value is where competitive advantage is now being determined. What separates winners from everyone else is not access to AI. It is the ability to convert capability into outcomes with minimal friction and within a time frame that justifies the investment. Speed to first value, speed to operational value, and speed to scale are no longer technical metrics. They are financial ones. So what should leaders take away from this? For CEOs, the signal is that AI strategy cannot sit on the sidelines as a parallel initiative. It has to be integrated into how the company generates and captures value. That means prioritizing use cases where AI directly accelerates revenue, improves customer retention, or expands share of wallet. It also means choosing partners that reduce the time between deployment and measurable impact. For CFOs, the shift is towards governance. AI is not just a cost center or a speculative investment. It is a portfolio that needs to be measured against clear economic outcomes. Consumption-based pricing models, like those increasingly used by OpenAI and the hyperscalers, can be powerful, but only if they are tied to value realization. Otherwise, they introduce variability, volatility, without accountability. For CIOs, the implication is architectural. The organizations that move fastest will be those with clean, accessible, and well-governed data, with integration layers that allow AI to operate across systems, and with observability frameworks that track not just system performance, but decision quality. Platforms like Atlassian, OpenAI, and MongoDB each offer pieces of this puzzle, but the advantage comes from how they are orchestrated together, not from any single vendor. The broader conclusion here is straightforward, but it's very consequential. The next phase of enterprise AI will not be defined by who builds the most advanced models, or who has the largest data sets, or even who invests the most capital. It will be defined by who can reduce friction, accelerate outcomes, and convert capability into measurable economic value faster than everyone else. And the revenue and go-to-market leadership and org moves we saw this week and last are early indicators of who understands that and who is already repositioning to compete on those terms. Okay, well, that's all for now, folks. Thank you for being with us. Would love to hear your reactions, your experiences in this area, other thoughts. Leave a like, leave a share. Take this video to colleagues and friends, and we will see you on the next episodes of EdgeBytes. Take care, everybody.